Welcome back to another trading video. Now in this video, as you can see by the title, I'm going to be talking about the top 5 charts to trade essentially. So the charts I trade are what people call the major charts, the major currencies. I trade Euro US, Pound US, Australia US, US dollar Japanese yen, and gold US. So those are the 5 major charts, called the major charts because basically everybody trades those charts. Now one thing you'll notice about the charts I trade is they're all the pairs are versing the US dollar as a currency. Now that's basically because the US dollar, as most people know, is pretty much the biggest currency, and it makes up for 50% of all the market movement every day on the trades. So that basically means that charts versing the US dollar as a currency are the most liquid charts. Now, if you do trading, you should know what that means by liquid charts, but I'll explain further in detail. So liquid basically means it's got the most money traded on it per day. Obviously, it's a major chart. But what that translates to, obviously, it's got the most buyers and sellers, and that allows for lower spreads. Now, the reason it allows for lower spreads is because trading is a zero-sum game. So when one person wins, one person loses, and vice versa. So essentially, when you're buying, someone else needs to be selling. Because there's so much movement going on both sides, so obviously buys and sells, then it allows for smaller spreads because there's movement happening everywhere. And smaller spreads does make a massive difference when you're trading, because we're talking about precision differences when it comes to any sorts of trades. Other good advantages of trading on liquid charts is there's less gaps in the candles. So if you've traded for long enough, you'll notice that sometimes it can jump and leave a gap. Obviously, you don't want gaps. That's obviously no good. And being really liquid charts, when news events come out, they don't go as insane as other currencies. So we're not talking about like drastic, massive pip movements within seconds. It's usually pretty calculated, so to speak. And of course, the other point of it being less crazy, lower spreads, and the movement's very nice, is the stop losses and take profits. You can guarantee they'll always be hit really nicely. Like it's not going to jump up past or below the stop loss take profit, that sort of area. So you can pretty much it's fairly safe and secure to trade in those charts. Now, because there's other good charts to trade, and because of all those factors, the low spread and all the other factors I've described, and that's why I trade on those 5 charts. People like to look at all the other charts for whatever reason, but it's really, especially if you're new to trading, it's best to stay away from all the other pairs that have more spikes, more gaps, that sort of stuff. It's obviously less liquid charts. It's best to stick to the 5 main ones. That's what everyone trades on. That's what you should be trading on too, and that's what I suggest you trade on. But yeah, that's about it. A pretty simple video. I suppose this video is more for people who are fairly new to trading, because if you're in trading and you don't understand those things I just talked about, yeah, there's not really much hope for you, to be honest. But if you're new to trading, that's just some basics of information. Those are the 5 charts you want to look at. That's about all there is to this video. So don't forget to subscribe to the channel. There's more Forex videos to come. And I'll be talking about just a whole lot more of different sort of tips and tactics and whatnot to use to be successful in Forex. But that's about all for this one, so I'll see you next time.